Hi friends, welcome to A to Z Learning channel. In this video, we will help you understand which are the stocks that have been consistent performers over the last 5 years. We all completely understand that stock markets never move in a unidirectional manner. There is huge volatility. Sometimes stock prices go up, sometimes go down, sometimes results could be very strong, but still the stock prices may not follow what the results are suggesting because there are some other news that are floating around. There are some other data point that market operators are considering, and therefore stock prices can move in a very different direction. So in this video, what we are trying to help you is basically that we have a large universe of actively traded stocks in India. Let's take stock and find out how many of those stocks have performed consistently over the last 5 years. All of us have got our favorite stock, but when you kind of apply a consistent criteria of identifying stocks that have consistently outperformed, then you'll be surprised that you may not find some of the names that are your favorite on that list. So just before I start my video and start to share with you the name of the company, a quick request that after you have watched the video, if you like the content of this video, then please do not forget to press the like button. And if you have not subscribed to our channel A to Z Learning yet, please do subscribe and become part of our viewers family. I've been given the feedback that I emphasize on this point of subscription and pressing the like button. So this time I'll say only once. So without any further delay, let's start the video. So as I said that the key question in everybody's mind is that how do we know the companies, the stocks that have consistently performed, that have weathered the downside of the market for whatever reason, that has also weathered the storms of the industry level challenges, and consistently delivered good results and good return to the investors. We completely get that it's very hard to imagine that a stock will go only in one direction, say going up and up. But over the long period of say 5 years, if a stock is unable to deliver a decent return on a consistent basis, then it poses quite a lot of questions. And in the current times, when there are large number of retail investors who are entering into the stock market for the first time, it's even more important to find out which are those gems, which are those industry leaders which have in the past consistently performed. So in order to kind of identify these names, we have applied a simple criteria. And and the criteria is in terms of stock's ability to deliver at least 15% return in each of the last 5 years. Okay. Overall, we are expecting the stock to deliver at least 30% CAGR over the 5 year period, but there should not be any year when they have delivered less than 15%. Why 15%? Because we think that in India, the inflation rate is somewhere between 5 to 7%, and a risk-free return can fetch about 5-6% to any investor. Therefore, inflation plus the kind of risk-free return, if you add, it gives you a number of about 12%. And so that's the sort of kind of minimum benchmark for a risky place like stock market to kind of start with. And therefore we've set the threshold at 15%, which is slightly higher than the minimum of 12%. So 15% in each year on a compounded basis over a 5 year period, at least a CAGR of 30%. So those were the kind of return criteria. On the top, I have applied the criteria of keeping it to market capitalization of 50,000 crore. The reason I'm applying this 50,000 criteria? Because it's sometimes seen that if you're a smaller company of say 5,000 crore, 1,000 crore or 10,000 crore, you may be in early stages of your business and you may have that bright idea before the competition comes in your industry. It may be possible for the companies to deliver this sort of 15% of return. So 50,000 crore is a decent enough level, though it's still kind of considered mid cap. Uh, but we are looking at 50,000 crore as the minimum criteria. And the universe of actively traded stocks in India is over 3,500 shares. And you can pause the video and give me your suggestion. How many shares do you think would have met this criteria of delivering 15% return and are of the 50,000 crore market capitalization? I think my own guess was that at least there will be about 100 to 200 companies which would have achieved this criteria. To my surprise, though, there are less than 1% of those actively traded stock which have delivered this. In fact, in the market capitalization of at least 50,000 crore segment, there are only 8 names. Yeah, you may find it very, very surprising. I definitely found it very surprising that there are only 8 companies in the whole of the market with 50,000 crore or plus market capitalization which have delivered at least 15% return in each of the last 5 years and an overall basis a CAGR of 30% and above. You must be wondering what are these companies, because these are the truly speaking the consistent performer. So if you're particularly a retail investor new to the investing in the stock market, these are the names you need to be watching out, because they have seen the pandemic, they have seen the cyclical changes, they've seen the policy level changes from government from time to time in last 5 years, and in spite of all those headwinds, they have performed and delivered a return of 15% plus in each of those 5 years. So let's talk about the names of those companies now. The table has come on your screen. There are 8 names, as I said. The first name which have delivered the best is Adani Enterprise. Their CAGR for last 5 years is 105%. Can you believe 105% annualized compounded growth? And they absolutely meet the criteria of delivering at least 15% in each of these 5 years. Astral Pipes, which is relatively a smaller company, but still about 50,000 crore company, so it's large enough to be included here. They manufacture plastic products, pipes, and all that. They have delivered 58% CAGR. Bajaj Finance is the third name. They have delivered 54% CAGR. Jubilant Food, your Domino's, they have done really well, 54% CAGR. D-Mart, Avenue Supermarket, they have also delivered 50% CAGR. Divi's Lab, 43% CAGR. Pidilite, 33% CAGR. And Asian Paints, 31% CAGR. So really, really amazing numbers that they have delivered, because these companies were also impacted by pandemic and several other policy level changes, competition related challenges. In spite of all that, they had something unique. They had the pricing power, they had the market kind of power, which led them to deliver these levels of returns to their investors over the last 5 years. Usually, when we kind of make the investment decision, number of retail investors kind of focus on the PE ratio. What is the price over earning capacity for the individual company? As you would see on your screen on the right, for example, Adani, which delivered 105%, their PE ratio is 205. Bajaj Finance, 54% CAGR return, but 98 PE ratio. Pidilite, 33% CAGR return, but 111 PE ratio. Asian Paints, 31% CAGR and 105 PE ratio. purely looking at the PE ratio could put many people off in terms of investing in these companies because they are their sector leaders, therefore commanding the premium. There are more people looking to invest in these companies, but they have delivered good returns, so why not? So this sort of kind of leads to the another conclusion that I have drawn looking at the consistent performer data is that PE ratio could be sometimes misleading. You need to also think about that if the company that you have chosen or selected is the market leader and has the pricing power and has been consistently growing its market share, then PE ratio may not be an important criteria for you to consider. Yeah, if it's a developed place like US markets have got a lot of kind of penetration by all sectors. So within that each sector you'll see at least 10, 15 really good names with solid market share. In those markets, in those sort of setups, P ratio is absolutely an important criteria. But as Indian market is not yet developed, and there are sector leaders which sort of kind of command large portion of the market, like Pidilite, for example, they I think control 80 to 90% of the market share in their product segments. So if any investor is looking to invest in the sector in which Pidilite kind of produces product, you're bound to pick up Pidilite. You can't ignore Pidilite. So they will always have a higher PE ratio. So it's very important to kind of use PE ratio in the right context. So I hope these 8 names that I've shared with you are helpful. Some of these may be a surprise for you. You may also be surprised to note that some of your favorite stocks are not even in this list. For example, Reliance is such a kind of wealth builder for investors, but they have also failed to deliver this level of return. They don't pass the criteria of at least 15% return in each of the last 5 years. So some of the kind of probably expected names are missing from here, and some of the names may surprise you that, oh, you never thought that they will appear in this sort of kind of list. So I hope this is helpful. Now, just to finish on the point, is basically that if I lose this condition of 50,000 crore, because clearly I wanted to focus on the large enough companies for retail investor, but if you kind of remove this criteria, how many more companies will get added into this list of consistent performers? Again, anybody's guess. When I thought about 100 odd companies should be there. But again, the list, even after losing this 50,000 crore criteria, the list goes up by only 15 more names. So overall, if you don't apply any market capitalization criteria, the the list is this list includes only 23 companies which have delivered at least 15% return in each of the last 5 years. So it's mind-boggling that out of a universe of more than 3,500 stocks, we have only 23 names which have delivered 15% return, which is not fantastic return. When people look at Indian stock market or any stock market for that matter, they're looking for very high return, but 15%, which seems like a modest threshold to kind of aim for, then there are only 23 companies that meet that criteria. So which are those additional names? I'm not going to list all the 15 names, but some of the names that get added if I lose the criteria of market capitalization. Names are Abbott India, which is a pharmaceutical company, Coforge, Aarti Industries, Vinati Organics, Atul, Alkyl Amines chemical company, and GM Fodder are the sort of kind of names that get added. So you can see that then you start to see the companies which are 10,000 crore, 5,000 crore, 30,000 crore sort of kind of segment. And the smaller companies, as I said at the beginning, again, never easy to kind of produce these sort of numbers, but it's probably more of a possibility as they are their early stages of building the business. One last most important point, all the data that I've referred in this video has come from ET Markets, Economic Times market segment, their January 22 edition. So all the data is from there. I've all tried to kind of basically use that data to narrate the story that I found really, really fascinating to note other day. So I hope you've found this kind of information helpful, useful to know that it's not a place, stock market is not a place where you could easily make money. You need to really work hard. And when you look at this data, you realize that there are only less than 1% companies which have delivered at least 15% return. So it's a very, very select few companies that deliver, to which are the true winners and deliver good return to their investors. So thank you so much for watching our video, and good luck with your investment decisions. Thank you.